together very
well. Oil and vinegar.
That's right. So it is, according to my clock, it is 7 o'clock. Why don't we go ahead and get started? There might be some others joining us and folks joining us on the YouTube live stream. So it's my pleasure this evening to, first of all, thank Mark Goldstein, who is associated with the AZ Tech Council, who introduced me to the Arizona Fintech Council, which is represented by Miranda and Kelsey tonight. And the Arizona Fintech Council is a new organization, and it's although it's called Arizona, it actually has a global footprint. So please keep that in mind as you're listening tonight. So I've had the pleasure to meet some of the folks at the Arizona Fintech Council, and fintech and blockchain and decentralization are kind of dancing together. They're a little bit separate, but tonight we're going to be talking about the opportunities for startups. And again, I want to keep I want to keep it at the top of the mind for everybody that watches this this session, that this is an opportunity for startups that are involved in fintech all over the world. And I believe it also includes banks. There's an opportunity for banks from all over the world to participate in this as well. So it's really
in the U.S., but yes,
oh, I'm sorry,
U.S. financial institutions.
U.S. financial institutions. Yeah. But it's really an opportunity to start to bring together some innovation to banks and the banking sector, and start to explore what sort of collaboration can happen. So with that, I will turn it over to Miranda and Kelsey. And if you could just tell us a little bit about not only the Arizona Fintech Council, but also about Catalyst Consulting Group, or CCG, and take it from there, go through the presentation, and we'll open it up for questions.
Perfect, okay. Great. We have a short presentation because we are hoping that this is interactive with questions. So feel free that if a question comes up to interrupt us, because we do want this to be interactive. But I'm the COO of Catalyst Consulting Group, and thank you so much, Jay, for inviting us to speak here about this, and also Mark for connecting us. CCG Catalyst Consulting Group is a management consulting firm focused on the financial services sector. Our primary clients are banks, credit unions, and fintechs, but we do touch in other company types within the financial services sector. And Paul Schaus, who's our founder and CEO, has run this company for over 20 years and has kind of seen the progression that we're seeing now, even more so because of COVID, of this trajectory of fintech companies and banks and other financial services companies needing to partner and merge closer together. And because of that, and because of Arizona, which has been one of the leaders in trying to create that partnership between banks and fintechs with the Arizona Sandbox, which I'm sure you guys are well aware of, especially those of you in Arizona, that we were the first state to create a fintech sandbox that allows a regulatory sandbox in the state. And Arizona is and still is the most unique state because we don't require a domicile restriction for those fintech companies. So that means a fintech from some different state or internationally, if they are partnering with a US financial institution, can come in and play in that sandbox and do a proof of concept in a regulated environment. Now, the council came and was kind of born from this idea because Paul Hickman, who runs the Arizona's Bankers Association, and our founder, Paul Schaus, got together and thought that there really needed to be an avenue of starting to really create and start these introductions to put good fintech companies and innovative fintech companies in front of numerous banks at once to kind of create an avenue for this partnership And for those fintechs that need the regulatory sandbox, to kind of just to give them a way to partner and have somebody to kind of help get them into the Arizona fintech sandbox. Now, the Arizona Fintech Council is a little bit broader. So we do not only ask that the fintechs need the regulatory sandbox environment, we actually wanted to broaden that and to allow fintechs of any type of technology. So whether you need to do a proof of concept in a regulatory environment or not, to come together. And so we're kind of excited to tell you about the Arizona Fintech Council. So the council is a partnership. It's a 50-50 partnership between CCG Catalyst Consulting and the Arizona Bankers Association. We think that we're quite unique in providing the opportunity for fintechs and banks to partner together in one umbrella, because we are creating a council that has over 20 member banks of all different sizes, ranging from community banks to regional banks to also the super regional financial institutions, and have those innovation decision makers within the room to be able to really look at these fintech companies and see if what they're offering is something that the bank would be wanting to potentially do a proof of concept with. Also, we're very excited that we have public policy supporters and partners that are in Arizona. I think the council is quite unique, and Arizona is unique because we have these great partners that from various avenues of Arizona are trying to promote the innovation and economic growth of the state. So that's something that I'm really proud of, that we have the Arizona Commerce Authority, GPEC, ASU, Arizona Technology Council, which was our introduction to the desert blockchain community, and the Sun Corridors to really be helping us not only from the standpoint of maybe a Arizona focused partnerships, but also they can provide counseling or mentorship to some of these fintechs in various ways that we can't, whether it's from ASU providing a talent pool to fintechs that are looking to expand to the state, to other types of introductions to policymakers in Arizona. So probably the question of the night, or the question that we get asked the most, is who's eligible for the council to go and present to the council? And I think the best way to help narrow down this is are you a fintech, or do you know a fintech, whether international or US based, that needs to do a proof of concept with a financial institution within the US? If the answer is yes, then that is probably the first step of saying that the council might be the right path for you. We really are focused on fintechs, whether international or US based, that have an innovative product that has not or does not really have a partnership with a financial institution yet. And the reason why is we really want to support startup companies, startup fintechs that are looking to partner with banks early on to be able to prove out their concept and be able to establish a relationship and a growth trajectory in the US market. So we've had interest from established fintech companies that are internationally based and their next growth stages to come to the US, as well as we've had even applicants already that are Arizona-based startups that are looking to grow and want to do partnerships with US-based banks. I think one of the other things to note is the domicile restriction is not focused just on the fintechs. So the banks that are going to be members of the council are not only Arizona-focused banks. We do have banks that are not domiciled within Arizona or don't have clients in Arizona, but if they do, they definitely are associated with the Arizona Bankers Association because we have that great partnership with them. So the process of the Arizona FinTech Council is to get a FinTech vetted and in front of our member banks really is, first step is just to submit an online application. This is to kick off the due diligence process. And we've created just a fee of $250 because we wanted to ensure to keep it at a number that was not hindering startup companies to join, but disincentivizing startups that maybe weren't quite ready for that proof of concept stage. We don't need them to have a product that has customers, but what we do need is a technology and an innovative product that is ready to do a proof of concept with a bank. From the application being received, CCG Catalyst would vet the applications and ensure that the FinTech A is qualified to meet the council and B is at a stage that they're ready to be viewed and present to, and also that their product is innovative enough that the banks would be interested in hearing their presentations. The FinTechs will have 1 hour to present each. So each FinTech selected has 1 hour to present to the member banks at the meetings that we'll be setting up. And that will include a Q&A session. From then, the member banks have 30 days to decide whether they want to move forward with a proof of concept with our FinTechs that's presented. So that's very high level. Hopefully you guys have more questions, but I just wanted to give a bit of an overview of what we're looking to do so we can, we're happy to take any questions. We're happy to chat a little bit more about what we're doing and how this community can be of assistance of getting the word out there or promoting the partnerships between banks and FinTechs.
Miranda, if it's okay with you, I'll stop your screen share and then we can go on.
Perfect,
full
definitely.
view. Okay. And open it up for questions. So we'll go speaker view. Cool. All right. What questions do we have?
So I have a question. Hey, Miranda, this is very exciting. I really like the way all these different FinTech are coming together in Phoenix. It's really cool. Your definition of FinTech for the banks, what's the scope of it? Does it include InsurTech? Does it include financial wellness, financial advice, and so on?
Yeah,
as well as payment?
Yeah, so definitely payments, blockchain, AI, reg tech, and all of the nature. We do have a wide net. Now, that being said, our first meeting we're hoping to have within Q3. And the reason why we haven't quite settled on our first meeting is we believe as a council that it's very important to create those partnerships and relationships in a hopefully in-person environment, or at least in a hybrid in-person environment. So as we get closer, we are going to be pulling the banks on what type of technology that they're really focused on at that time to make sure that the FinTechs going forward during each meeting are meeting the needs of the bank. Because our ultimate goal, and the ultimate goal of the banks and the FinTechs for sure as well, is to create a partnership that doesn't stop at the proof of concept. And hopefully doesn't stop at the presentation either. It's really to be that glue to get the FinTechs and banks working more closely together.
And Miranda, can you give some examples of projects, and maybe in a general sense that have approached you so far? And then I would love it if, Jim, if you could elaborate on some of the FinTech sectors that you talked about, InsurTech, advice tech, and that sort of thing. So, but Miranda, if you could let us know what's emerged so far.
Yep, so we've had some applications that have been, I would say, across the board, and conversations that have been across the board of FinTech definitions. So we've hit the more of the mortgage lending space, that companies are coming forward using different blockchain types of technologies of understanding who your customer is. Speaking of blockchain as well, actually using that technology, we've had a conversation with some fintechs that are dealing with that in know your customer space, so the KYC process, to be able to better have that your own information within kind of your space and ability to share to lenders or to other financial institutions in a click of the button. There's even been more towards kind of AI types of fintechs that are dealing with kind of credit risk in the asset management space, as well as.
Before, if I could interrupt you, before you go into AI, if I could ask you to elaborate a little bit on the identity and the know your customer, and make sure that I understand the use case that's being proposed based upon what you just described. That sounds like it's both identity as well as information management. So if Jay is planning to apply for a mortgage, A, you want to verify that Jay is who he says he is, and B, it sounds like there might be a way via blockchain and decentralization and so forth, decentralized networks or distributed ledger technology, for me to disclose my information simultaneously to multiple lenders that might be interested in doing business with me, instead of filling out a separate application over and over and over. Does that pretty well capture sort of the innovation space that you're talking about in that particular segment?
Yes, it actually almost touches it, encompasses what the company that I was thinking of is looking at is instead of each lender or financial institution needing you to fill out the same information, prove who you are, prove where your funds came from, for you to actually have that data available to be able to share easily, instead of filling out multiple paperworks and them doing kind of their own verifications individually. I'm sure anyone here that's applied for a mortgage or any other type of loan knows the mundane task of ensuring that all of the hard copies are filled out and verified.
Well, I think this particular community that's, interested in blockchain and data control and so forth, another dimension of what we're talking about here, using this innovation, is that Jay controls his own data. You're not relying upon some third party to, distribute my data that I may not have control over, I might not have verified, and all that sort of thing. So that, I think that's a huge point of appeal from the consumer side and the individual side, with such a construct, if I'm understanding you correctly.
I think there's an appeal for the consumer, but there's also an appeal to the financial institutions, correct? I think there's just, sometimes it's how do you share the data within the regulatory environment. Those are items that we'll get over. Actually, our director of research just released a piece on open banking and kind of where the core providers are currently with their ability to share your banking data, just from a core provider's point of view. And Europe, and she mentions it in the report, but Europe does have a very clear definition of what open banking is, and the US doesn't. So that's why it's a hard place for the US to start, because people are not talking the same language or the same definitions sometimes. As when you're talking about data sharing, opening up API sources and other things like that.
I'd love to get a link to that paper.
Yeah, definitely.
So I'm sorry I interrupted you before you were transitioning into artificial intelligence.
I was just trying to give you guys a bit of a flavor, but I think it goes to Jim's point is the fintech definition is, it depends on who you talk to, what defines a fintech. And so I think our net is just a little bit wider than some other nets, but what really matters of what we're looking for at the council is, do you have a technology that needs a proof of concept? And we're really trying to target fintechs earlier before the venture capital firms or the angel investors start diluting kind of the equity shares of that before they even get to partnerships with banks.
So it might be possible. I mean, the first thing that came to my mind when we were talking about this was that, you know, startups that have a working prototype and maybe even beyond would have an audience with, you know, 20, 30 banks that, and the first thought that came to my mind is, well, maybe those banks would want to invest in these startups. But there's also an alternative that maybe the banks would be willing to be part of a focus group or possibly customers for the particular use case and prototype and application and so forth. So it's not necessarily that you gotta, you know, sell part of your company to be part of this, or part of the attraction is you might not have to sell part of your company. You might actually be talking to potentially 20 or 30 customers all at once, correct?
Exactly. So the council does not restrict if one financial institution member of our council wants to do proof of concept. That doesn't hinder another one from participating or doing their own. Also, I think, Jay, your point's exactly right. Each fintech's going to have different goals from this. Some are just going to be wanting to do a proof of concept with hopes of proving out their technology and growing their customer base. Other fintechs might want to have that as well, because that's one of the criteria, is to do a proof of concept, but they are looking for funding. And the council is not going to dictate after the proof of concept's completed how that partnership looks. So if the fintech and the bank agreed together to have them purchase an equity share, that's absolutely possible, or could happen. Or they could buy the fintech, or they could just be a customer. It very much depends on the bank and the fintech's needs and wants from that situation. And the council won't dictate that. Our hope is that the proof of concept goes well. And of course that there is at least a customer relationship there, because that is success in our eyes, not the proof of concept, but the relationship that develops after the proof of concept.
Awesome. And I'm sorry, again, I interrupted you before you transitioned into artificial intelligence.
AI, the hot topic. No, so there's lots of other AI types of technologies that we're seeing that people are asking questions about. Is that of interest? I think from that standpoint, that's also depends on what you mean by AI. Sometimes banks consider AI and machine learning the same thing, or even just very technical algorithms. My background, I've come from a quantitative investment firm, so I understand a bit of the difference, but sometimes it's an educational type of discussion when you are dealing with the financial institutions to really understand what the artificial intelligence technology is actually offering or providing to the bank or to the clients of the bank.
So if the prototype's really good, then the startup could tell the banks that are listening in exactly how they're going to participate in the future, whether they're going to be customers or equity participants or both. So that's the real test of AI, right?
Yeah, exactly. If you're talking about them giving them financial advice, yes. AI in the sense of a wealth manager.
Just kidding. So, okay, any other things you would like to highlight and kind of spark ideas among the folks that are listening? Miranda, before I kind of turn it over to Jim and have him elaborate on some of the use cases that he was talking about.
No, I mean, from our standpoint, we're really looking to get the word out there. We've been working with some international associations as well. We think there's a lot of opportunity to have Arizona be the spot that international fintechs looking to grow into the US. We could be a gateway location. And so that's what's really exciting, or the council is hoping to provide is also economic growth and international awareness of the uniqueness of our state. And so we're excited about it. You know, always happy to elaborate more if anyone has any questions, but as we get closer to our first meeting, we could always chat more to this group.
Jim, you listed several areas and not all were obvious to me. Would you mind elaborating on some of those, like InsurTech and I think Advice Tech and things like that?
I participated in the ASU Innovation Open this past year and was one of the judges in the finals. And interestingly, two of the semifinalists were from InsurTech. So they're beginning to move into the, you know, what had previously been like a hard technology slant to the ASUIO. And one of them was in FinTech, as I said, they actually made it to the final round of competition. So I was curious because banks are also into insurance. And I definitely see a merger of banking and insurance as we move forward in terms of AI and financial planning, financial wellness, putting all that together. So, you know, be curious, Miranda, what your thoughts were around that.
Yes, I mean, banks do dabble in insurance, right? But that is more of a bifurcated space. You are seeing more of insurance in the asset management space, opening up of types of funds to help manage that. But I think as the data opens up, you're going to see a progression of more segments within the industry blurring their lines, if not merging more together. I mean, that I think is just a natural progression when you can safely start sharing your clients and your own individual data.
And in terms of financial wellness and some basic financial planning and investments, having greater control of the data and being able to use AI and machine learning and so on, it's getting easier to bring financial planning down to the lower levels of the bank customers. My background was almost, was at the end was I ran basically a banking as a platform in the retirement plan space. And what we're seeing now is the financial planning is moving into all the participants in the various retirement plans, so that you're bringing really, crucial value down to individuals to help them, kind of manage and plan their finances. And that's all because of, the whole move to the access to data and to FinTech.
Exactly. I mean, if you look at financial wellness, there is even in the FinTech space targeting younger consumers. I'm not talking about 18 plus. I'm talking about targeting teenagers and to get them educated in understanding their finances early on. I see that space growing, and the more access that people have to understand the financial markets and the data, you're going to see, I think, more and more ownership taken over. I mean, Goldman Sachs just started expanding more of their retail arm. That's one of my old previous firms, and I left right when they were launching Marcus, and it's just been one of their fastest growing areas and divisions because they entered the retail space when you don't need to have a brick and mortar location unless your customer base requires it. And you're able to be very nimble in how you're educating and pushing information and decisions to your customers.
And so all this enables the democratization of finances. And when you look around the world in the different global markets where they don't have a lot of brick and mortar banks, through the virtual world, they're able to, almost like going from skipping the landlines and going right to mobile phones. They're stepping ahead of us.
You see that a lot in India. India is one of the places that, they really did skip to mobile phones, and they have a provider that gives free service data as long as you listen to various ads throughout the day. And so that's giving access to individuals that didn't even have bank accounts before, and starting to create some of those online digitalized platforms is creating a democracy for banking. I think, though, you're going to see that there's issues within that if we don't have the financial wellness and education programs in place. Otherwise, I think you have to tread lightly with some of the regulations that we need financial advisors to go through or brokers to go through to really understand how some of the systems works or the market works is really important to understand what you're doing with your money, how you're placing it, and the risks that maybe you're taking. Those need to be out there in the open for people to decide on their own.
So at ASU, we're looking very carefully at incorporating what I've been working on with the business school in terms of FinTech, incorporating it into the ASU.io as a different segment or track of that competition. And that whole program of the ASU.io is going global. So yeah, it's pretty exciting.
That's very exciting.
Jim, will you define what ASU.io is?
So that's the ASU Innovation Open, and it's run by the engineering school. And it's an open competition that has been largely national, but is now going international. And students of college, university age, including into the master's and doctorate program, are able to pitch their ventures and new business ideas. And winners do get, there's like 5 or 6, major cash awards to the winners, and they try to put them in different tracks. So you have, biomedical, health. We may be adding something in FinTech.
Well, that's exciting. I didn't know that.
Yes, well, it hasn't been announced yet. So we're still kind of discussing the addition of FinTech into that, but I think it's a great idea and it's a great way to go. And I think if that happens, it'll be kind of a partnership between the engineering school and the business school.
I think that partnership's so important. That's one of the reasons why we're excited that ASU is a partner of the council, because when we were speaking with Dr. Crow about it, they have 20,000 engineering students, the largest engineering school in the US, I believe. So lots of talent that unfortunately has to leave the state a lot of the times just because we don't have yet, I believe we will, enough positions for those qualified students.
Right, and I don't know if Mark Goldstein's on the call, but he could probably speak to this more. I mean, I really think Phoenix is building up a critical mass in terms of FinTech. That's why it's so exciting to hear about all these different, logs on the fire, because it really is creating quite an ecosystem within Arizona.
Exactly.
Jim, if you could share any of those links, the ASU.io program with me, I'll be happy to post that on this YouTube video down in the comments and other places. And we would love to continue to follow up and highlight whatever progress happens in that program, because it does sound very exciting. And I think there's some synergy between what's happening in the decentralized web space and all of those, the biotech areas and so forth. So
Yeah, the blockchain.
mhm,
Yeah, it's
And then-
incredible.
and then you used another term that I'm not familiar with. Exactly what is a landline? Just kidding. Just kidding.
I was like, if I know, you've got to know.
When we transitioned from landline to mobile phones, I'd still stand by the wall.
That's
Well-
right. Remember when we used to share a phone? You know, hey, this call's for you.
You got to keep your landlines because in Hurricane Sandy, those were the only phones working for a while during that time period in New York. So landlines, I still think, have their value.
Oh,
For
yeah, you're right. When I was working, I'm 5 years retired now, but I had backup and redundancy everywhere. So even though I had a mobile phone, I had landlines both at I had a cottage and I had one at my primary residence, and I could always be reached, you know.
It's important. You don't think about it, but it's a good BCP thing to have.
Miranda, about how often do you foresee these hour-long sessions with the groups of banks? Is that going to be a monthly thing or just scheduled on an ad hoc basis? Or
So once we do our first one, we are aiming for quarterly. Now, that being said, we are flexible if we're getting great qualified fintechs and we think that a lot of them are prepared to go to the council more frequently or grouping them together in multiple days each quarter. It's just from our standpoint, we're at least trying to do, once the first one's up and running, once a quarter and allowing that time for the fintechs.
And do you envision this to be virtually or in person or both?
So the first one is going to be a hybrid. And the reason why we haven't scheduled it is because we're looking for the vaccine rollouts and for more countries to be opening up their flights and borders a little bit more. And then once we are kind of at a place that we think we'll be able to have a good number of our fintechs and our banks in person, and those that are either uncomfortable or can't make it because of flight restrictions or something of that nature, to be able to present in a hybrid virtual nature.
Excellent.
So virtual will always be there, but I think it's so important. And Paul Schaus, our founder, also believes so as well, that you just, in order to create those relationships, which in order to do a proof of concept, you really need to develop a personal relationship with the fintech or bank, and in person is just giving the best opportunity for those fintechs to pitch their product.
I agree.
Get me out of the house. I'm ready to go. On the go. Yeah, I'm there. I'm there if you in person.
Perfect. Well, I'm working from the office now, so we're slowly but surely people are going back to work, or in person, not to work.
I have a question.
Go ahead, Willie.
Miranda, when you use the word banks, what do you mean by that? Are these actual big banks, or are these businesses or private individuals acting as banks? What does that mean, banks?
No, so these are banks. So, and when I mean that, I'm talking about banks that you would know. So smaller community banks are also on the council, but we have regional and super regional banks. So a BMO or the likes, names that you would know. No individuals acting as banks or anything, or private equity firms, nothing like that.
Hi, Miranda. We spoke today, and I have a couple quick questions. You said, I think you said that you were trying to get clear with the banks, like what the fintech meant to them, like specifically like their needs. Did I mishear that? Like you're still sort of in conversation with them on that, or?
No, so we want to, before each meeting, to poll the financial institutions and ensure that the fintechs that we're bringing forward are technologies that the banks would very much want to do a proof of concept with. So we do have our pulse on the industry, but we will continuously be polling the member banks to ensure that we're not.
Oh, no problem. Sorry to interrupt. So the last day to apply, I think I talked to you that, we're moving forward with an AI blockchain project that's in real estate. And we have people that want to see that are not in the banking system. And then I had the one that I'm not going to talk about what sector it's in. We talked earlier today about that a bank, we've been approached by some on that earlier than we thought. So is there a last day to apply for the fintech for the one I talked to you about? And then the second question is does it matter if we're showing something in a different industry to people that have asked to see it at those companies that are not banking products, simultaneously? And then for the banks, does it help are they also looking for things that could go international? Like you're not only solving it for them in the United States, but that you could show that these banks may also have partnerships overseas, or it doesn't matter?
So I guess I'll answer the last question first. That doesn't matter. Some of the member banks have locations outside of the US, but it's not the fact that we're saying if this is going to be able to be a US product that can grow outside the US, that they're going to say no or anything like that. In the sense of a deadline, now, each fintech that applies does need to be due diligence. However, our application is rolling. So if, for example, a fintech applied, a month before the first meeting, probably not enough time to due diligence and prepare the fintech's team to be able to properly go forward and present to the banks.
Okay.
We just want to make sure that the fintech is not only qualified to go forward, but also in the best position to present to those banks.
Absolutely. Yeah.
But that being said, no, it's not that if you don't apply by March 31st that you are ineligible.
Okay. And then do you have things that you are, because we're finishing ours up for the other one, do you have things that you would tell us that, and I was looking at your application, that are the due diligence or additional things that we can prep ahead of time for you, like on your website, so we make sure that when we do present, we're handing you, obviously, to take your time, but be as professional as we can be to present anything, or is it all included in the application?
So the first round of due diligence is all through the application.
Okay.
That's very much making sure kind of that it's an established idea that has the technology there to be able to do a proof of concept, and that a proof of concept is necessary. Now, if the fintech kind of passes that initial due diligence phase, there'll be follow-up questions for understanding any reputational risk aspects, financial aspects of the firm, and lots of other things that we would just need to know to make sure that we're bringing forward a company and the founders of that company to a bank that can kind of move forward with the proof of concept and
That's perfect. No, we've done that before. That's totally acceptable and responsible. That's great.
I think I answered all of your questions, but let me know if I missed one.
No, you were great.
It might be valuable to just give a brief description of the Arizona Fintech Sandbox and what the advantages are there, because there might be folks that watch this that have no clue what the Arizona Fintech Sandbox is and how it operates. Do you want to talk about that a little bit, Miranda?
Yeah, definitely. I can chat a bit about it. Just so you know, the council is not directly associated with the Arizona Fintech Sandbox, but we think that it's a great program that we want to be able to put the fintechs in that apply, that need that type of environment. So the Arizona Fintech Sandbox is it was created by the Arizona state, and they're allowing really a regulated playground for banks or financial institutions and fintechs to test out their technologies in a regulated environment with customers. And that's really important because if your technology does interact with the end customer, you do need to have and ensure that you're not breaking any US types of regulations. And Arizona Fintech Sandbox is unique. I know I mentioned it earlier in the call, but I think it's really important is that it doesn't require the fintech to be Arizona domiciled, which is, we are the only state sandbox that's doing that. 5 other states have a sandbox like this. Arizona was the first, and Arizona still is the only one that doesn't have domicile restrictions.
Right. And so just in simple language, what it means is if you're a startup, you don't have to go through the expensive and onerous process of getting full banking licenses and money transfer licenses and things like that. So there's some big advantages. It's designed to foster innovation and experimentation, without and reduce the regulatory requirements. It's still very much designed to safeguard consumers and provide some responsibilities and so forth, but it lessens the regulatory
Burdens.
I'll call it, say,
testing.
burden. Yeah, I didn't want to use
Yeah.
the word burden, but it is a burden in order to get started. So, yeah.
I mean, I think you're right, Jay. It's creating a little bit of a safe area that is still safeguarded for the consumers of testing out your product with a financial institution. And that's so powerful. I mean, the US isn't the only country doing this. Federally, we don't have a sandbox, but the UK has a sandbox, and other countries throughout the world have created these types of sandboxes as well, because the financial industry is one of the most regulated, or the second most regulated. And so you just want to make sure that your product is going to be able to be actually utilized by the end consumer or by the financial institution. You don't want to develop this great product, go through all of the money of trying to get all the regulatory approvals and find out that it wouldn't work.
Right. Excellent. Well, are there any other questions before I use that last conversation to segue into what we're doing next month? Excellent. Okay, so I will use this opportunity to talk about what we're doing next month. On March 24th, we will be having a session titled DeFi and Regulation, and we're very fortunate to have Paul Watkins, who was the architect of the Arizona Fintech Sandbox, is going to be joining us from Washington, D.C. And we will also have Grant Frazier, who was involved with the creation of the Fintech Sandbox and recently wrote a paper. And we'll also have Professor Gary Marchant as one of our legal panelists, talking about some of the things that the Sandra Day O'Connor College of Law does in terms of soft law and other innovative regulatory, or at least I would say quasi-regulatory approaches. So that will, I just announced that today you can sign up for that. And we might have another panelist as well, but it definitely dovetails with what we're talking about tonight, because we've been talking about fintech, and something has emerged basically in the last few years, which is called DeFi, decentralized finance. And that is even, I would say, newer and very powerful, and still very much in the introductory phases, but basically global and happening like right now, with cryptocurrencies and blockchains and decentralized constructs and so forth. So that should be very interesting, and we'll be posting some more information on that as we move forward. So that's basically about all I have. If there's any other questions, any other comments, I have invited Miranda and Kelsey and the other folks to have another session, maybe closer to Q3 when things really get rolling. And so this is something that we're going to keep our eyes on, and definitely we want to foster this not only in Arizona but globally. So Desert Blockchain is the Arizona node for the DWeb community, which is definitely global, and that's at getdweb.net if you want more information on that. And I consider that to be the community of people that are really at the leading edge of innovation in many, many areas. So that's about all I have. Any other last questions or comments before we wrap it up?
I do have one question, Miranda, only because we've sort of been playing in the space, and it's kind of what Jay mentioned too. In the banks that you're dealing with, are they mentioning DeFi? Because we're sort of that gray area right now. I know in regulatory and some of the projects we have, we went to go DeFi and we kind of backed off because of the regulatory questions right now. I don't think we necessarily would, part of the one that we would go to the banks with is, I wouldn't say it's true DeFi, although maybe bordering on that in our pitch for them. How do they have their pulse on DeFi versus fintech and because we went real conservative in our AI and our blockchain to where we're not scaring anybody with that, but we've wanted to go straight for DeFi. How does the banks look at that right now?
Jay and I had this conversation actually a few times. I think, with the regulatory questions / issues that arise with DeFi, it's not that banks aren't looking at it and interested. It's just not something that they're able to jump on board with right away, because there's just a lot of question marks there. I mean, you're just starting to see some of the larger banks playing in Bitcoin type of investment strategies, which before they were being handled only by hedge fund type structures. So things are, I would say, kind of moving in that direction, but it's going to be, I think, slow for them to really be getting into some of the interesting DeFi conversations that people are having. I was talking with somebody in Europe actually that's looking at doing DeFi, but with actually the stock market. And the only way to do that really is through derivatives. And so it's finding a financial institution within Europe that's interested and willing to take on that associated risk of kind of opening up that market.
Well, my question is, and maybe this is getting a little bit, so we weren't sure, like, if, and we were just toying with this after I talked with you, was, we're curious to step our foot in there, but the last thing we wanted to do, because you're opening up this regulatory space, right? And we want to stay within the confines of what the banks are allowed to do too, right? So I've been tracking DeFi for a while, and I've also been tracking NFTs. And I wasn't sure if a bank, if you were using an NFT as a reward, saw that as DeFi. I didn't think they did, but I didn't know whether if we put that in the pitch, that was too scary and just to go real conservative and, and
You
so
want to just define NFTs, Stacy, just for
You're talking about tokens, right?
Right. Yeah.
non-fungible token that you can use as a reward rather than, you're going to yield farm on it, you're going to loan base on it, you're going to say, oh, it's a reward that maybe if you have this, you can get a discount on the products, right? Or discount. So it's a really reward. And I know NFTs are big. I know banks are starting to issue them. They're talking about, and it's kind of out of that world of DeFi where you're not scaring somebody with the loan or derivatives and synthetics. And so I thought, well, you know what? We've wanted to move in this. We've been scared of the whole DeFi space, but I kind of wondered, like in our product, like if we mentioned to them, like, it's a digital asset management, and part of what this would do is if somebody had this and you wanted to offer a loan, could you say, well, one of the products we're thinking about adding down the line, or you could add the line, is an NFT that might be safe enough that it's in the reward, but not considered true DeFi. But I don't really know if that would scare a bank and you're just going to go, not even open that conversation, or if, but it seemed like the NFT space, like in the insurance space and the banking space, was being adopted.
So I think it depends on the size of your bank as well, because if you're talking about community banks, they're
Probably no, it would have to be a
yeah.
large. Yeah.
It would need to be a larger bank that's kind of open to that type of thing. It's not something that I've been hearing a lot about, though, to be fair. So I wouldn't want to say yes or no. It's more that it's just not a conversation that I'm seeing come up as much within our realm of our banking space.
Or maybe just that to me is a no if it's not there, and it's probably just in that gray area. But I was wondering that about, because like we're kind of entering this so that as we're getting our traction, our target's been on DeFi, but we're not going to head into something that's so gray right now either.
I mean, DeFi is great. It's growing. It's competing against the financial industry as a whole. I mean, if you just look at the loan environment, I think it's up to 32 billion in loans issued within the Ethereum space. Like that's.
Think about how small that is in comparison where it could be. So these
but
are.
Think about how big that is. I think it was 25 billion a month or two ago. I mean, it is crazy.
That's what non-fungible.
I think since we started this session, it's grown to 45 billion, actually.
There we go. Okay, see, there we go.
Just kidding.
Yeah, but like we've taken a conservative approach, not to like what Jay's saying, but it was curious to kind of hear that, because that's where we've been sort of, but it's so Wild West right now. And the last thing I need a problem with is any regulatory things. Like I want to be in compliance completely, but I just knew the NFT space was getting ready to boom, and that seemed a little safer than the loan synthetic derivative kind of space. But yeah, I've been watching it and salivating.
Well, suffice it to say, there's
people discourage you. I mean, it's good to be at the forefront.
Yeah. Suffice it to say, the opportunity set is enormous, and I think just the thought of this conversation, like 10 years ago or 15 years ago, this would not be happening. Where startups could have an audience with 20 or 30 banks. And, everybody's interested in collaborating and experimenting and, and pushing the envelope for innovation. And, one of the things that came up for me at the start of this conversation when I first heard about it was, as an innovator, do I really want to sit down with stodgy banks and whatever? But clearly, if you look at Jamie Dimon's comments, the head of JP Morgan Chase, he is totally focused on what's happening with fintech and beyond now. And that's a radical change for him from like a year and a half or 2 years ago. So the banks really, I think this is a critical program for both the banks as well as the innovators to experiment with collaboration and, try something new and kind of stretch, what the legacy realms would have dictated 10 years ago or so. Well, we're at the end of our time. I would like to thank everybody for participating in this. And this recording is available on live stream on YouTube now. But it will be, I have to edit this and it will be in its final form by tomorrow. And I'll be adding some comments to the comment section below. But thank you so much, Miranda and Kelsey.
Thank you. Make sure you make us look good in your edits.
Oh, absolutely.
Add makeup for me, Jay.
Yeah. There'll be no cat images over your faces. Don't worry about that. So yeah, I will not do that. But maybe around Halloween we'll go into that. So Anyway, thank you so much. And again, stay tuned for next month, March 24th, when we'll be kind of a continuation of the conversation with our legal panel. So thank you. Have a good night.
Thank you, everyone. Thank you,
And
Jay.
look forward to future conversations.